What's going on, everyone? My name is Nicholas Merton here from Datadash, and today is October 7th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I'm here today to do a little bit of a rant and rave. I want to try to get to the bottom of a question that is on the minds of so many people when it comes to Bitcoin and crypto, and that is, what the heck is going on with Bitcoin? Why have we been going sideways for 7 months? This is something that is unprecedented, unheard of. It's left many bulls who believe Bitcoin could rally all the way to 200 to 500K in this cycle, wondering why we're so behind on a supposed bull market. And outside of that as well, it's left a lot of bears wondering why Bitcoin isn't collapsing and rather going sideways. So I want to try to provide some context around this and talk about the necessary things Bitcoin needs to see in order to expand further in the future. But above all, set realistic expectations, which I'm not seeing a lot of out there. We got a lot to unpack here in today's video. If you happen to enjoy it, consider dropping a like, and let's go ahead and kick things off. So first off, what's really going on here? Short and simple to the point. Why have we been ranging for the last 7 months versus what we usually see when visiting a prior all-time high, where we go by and expand even further from that to a large extent, usually kicking off our bull market? This has happened time and time again throughout history. The reason why this is happening is a couple of different topics that we need to provide some clarity on. The first thing you need to understand at the end of the day, if you haven't considered this already, is that Bitcoin and crypto as a whole is in its later stages as a technology and as a market. It is no longer this novel, new, risky asset class, but instead seen as a part of a well-balanced portfolio, a 1 to 2% minimum exposure similar to gold by many financial advisors and financial institutions. There are ETF products out there. There are exchanges. There are all the access points for institutional buyers, for pension funds, for family funds, hedge funds, retail investors, anyone you can think about. Even your grandma could get into Bitcoin, and I know we got some grandmas watching the channel, so props to you if you're managing your portfolio and as in tune with crypto. And we got some grandpas as well. But the big thing I wanted to emphasize with this is that all the access points are out there. Bitcoin is a mature asset, and we need to start understanding that it is no longer going to make the same price multiples it made in the past. And we can see that from cycle to cycle to cycle in Bitcoin, that with the halving event getting weaker over time, with more participants already being in the market and a requirement for even more inflows and more users to even get a fraction of the percentage returns we used to get, it is going to leave us with lower expected highs for price. Right? So that's the first dynamic to understand here, and that's a big reason why we've been having this 7 months of chop here to prior all-time high, because this is clearly a level where some people are still selling. Long, large-term holders in Bitcoin, but along with that as well, governments like the German government, who sold over 50 to 60,000 Bitcoin, the US government offloading some, Mt. Gox distributions finally coming through. It makes sense why we've been seeing this kind of sideways price action here. And the one other element here that I wanted to talk about, and it's usually only talked about in a purely positive light, but I'm not really trying to be negative with it, I'm just trying to be, provide context to look at it in a purely neutral way. A lot of people would say, well, this was saved because of the ETFs. And to a large extent, back during this summer, that's relatively true. We saw between March, during this period of time, around 834,000 Bitcoin being stored in ETP products, going all the way here to July, where there was up to 912,000, right? And if we really extend that here to September, going up to 931,000, so almost 100,000 new Bitcoin have been stored in those ETP products. And that's not a negligible number. That's pretty good. We had some really good months here, especially the expansion from June to July, coming in to stomach a lot of that sell-side pressure from the German government and a lot of the other government sell-side pressure, not to mention eventually Mt. Gox. But here's the important thing here. While a lot of people like to say that the ETF is this infinite money glitch that is going to guarantee Bitcoin continues climbing higher, and we're going to go to 200K and 500K, and there's going to be this mass mania where the floodgates are going to open, we never really saw that with the ETFs. We had some people coming in. We already had 621,000 stored mainly in the GBTC product, right? About 619,000 at the time of the ETFs launching in January. So net overall, we've only added about 300,000 Bitcoin, which is a little over a percentage of the supply. And when you really put it in percentage terms, that's relatively negligible right? In this case of Bitcoin. It's a great first couple of months of the year, and we'll see how year 2 and year 3 and year 4 goes, and maybe the ETFs will provide some kind of base demand. But what we are seeing in the numbers right now is something that unfortunately so many people are ignoring, but is an important dynamic to keep in mind. And that is when we are seeing outflows in these ETP products. We are having multiple months where either the inflows are relatively weak, single-digit thousand inflows, like a couple thousand Bitcoin per month, which isn't going to move the needle, and some months as well where it's outright just neutral or negative. So you can see this throughout history here, that there are some of these months here where the numbers are just not that impressive, or we see again stagnation in the trend when it comes to the ETP products. The base point I want to talk about here, and I don't mean to be too negative, I want, as I emphasized before, for you guys to understand, I'm just trying to realize why price is doing what it is. This chart here is going to give you a big part of that answer, because the ETP or ETF products are the ultimate last resort for inflows into crypto beyond governments and central banks buying Bitcoin. And while there are some out there in the world like El Salvador, we have yet to see any serious proof that the United States, that China, or any Eurozone banks, or in this case the central bank, the ECB, Bank of England, are going out there and sizably buying up Bitcoin, right? So we need these ETP inflows to be big, in a big way. We got to see inflows on a month-to-month basis consistently, where we're seeing 30, 40, 50, if not more, thousand Bitcoin being purchased, like 30 to 50,000 Bitcoin being purchased on a month-to-month basis. No negative months. We need the euphoria to show up. That's the only way you're going to get the kind of consistent rallies we've had in the past for crypto. It's a big reason why from January here to March, we expanded from 39K to 73K. So keeping that in mind here, right, this is a big reason why price has been stalling here, and it helps provide some clarity. If you guys want to understand some of the additional reasons why that is, we did an article this month in the Dash Report where we covered 2 other really important charts that will showcase and demonstrate why price action has been relatively stagnant, and how to know when the cards are going to flip, if the bulls are finally able to gain momentum, or if we're actually going to start expecting a little bit more sell-side pressure, at a minimum stagnation in price. I definitely recommend you guys check out the Dash Report. It's less than $1 a day if you guys want to support the channel. It's a great way to support the content we put out there. But the big thing above all is that alongside the ETF inflows, there are key metrics we need to keep an eye on that will help us to determine whether or not prices will be able to move up. I hope to give you guys some details here though beyond the ETF inflows, because the big thing above all is that we have to lean into price action. Things have started to improve since back in early August. We have higher lows, slightly higher highs. We're spending more time either within the 200-day pocket or our long-term moving averages, or above them versus being below them like we were for multiple months for the most part. That's a positive shift, but it also requires us to be realistic about what we can expect for cycle highs. And that's why I've constantly highlighted my target for this cycle. If I were to have an optimistic target, right now we're not heavily exposed into crypto right now. We're not building any massive positions just yet. However, if I were to start building positions and setting a target, I would probably be looking at a potential for $90,000 in this cycle. If we get a resurgence, if we get those 30, 50,000 Bitcoin purchases by the ETP products every single month, that's going to start to change the dynamic. That's going to allow for average everyday dollar cost averagers, alongside the ETF inflows, institutional purchases outside of the ETP products through stable coins and different areas of the crypto market, to be able to potentially drive this up to $90,000 in a sort of secondary wave of the expansion to actually set in real solidified highs. I know that doesn't sound probably incredibly exciting to people, but it's a realistic number. If you're following people who are saying Bitcoin's going to zero, or you're following people who believe Plan B and the stock to flow model that says Bitcoin is going to 500K, all I can say is that I've got a great bridge to sell to you. It's not going to do either of those in the near-term future. Not saying Bitcoin can't get there one day, but it certainly isn't going to do it now. It has been struggling for 7 months to be able to get any sort of institutional inflows, to be able to just break even considering the distribution we've had. And perhaps, maybe after that distribution is cleared and the ETF inflows pick up, we might have the liquidity injection, the inflows, to be able to get up to something like 90K. And again, this keeps in mind here generally speaking, the two prior highs, the slight linear expansion or line of resistance between these prior highs here. And I think this again plays into another important point that I want to talk about in today's video, which is that cycle theory. In my opinion, it is just my opinion at the end of the day, but you can see that there's a lot of evidence within the prior cycle and this cycle that the expanding cycle theory that we used to discuss has broken at this point, and I think very well that the 4-year cycle expansion is also going to break. I think we are beyond the era of bull markets and bear markets, and if we don't consider here that the returns have been diminished so much in crypto that we have started to do things we've never done, like stagnated a prior all-time high for 7 months. If we don't realize that the market itself is changing and we got to expect weaker rallies and probably weaker corrections, and maybe sometimes just sideways price action, you're going to get caught up in the chop. You're going to get caught up in the emotion of it all. And also, you might be a little bit upset, even if you're someone who's dollar cost averaging and hodling and focused on the long term. You may be surprised to see that Bitcoin may no longer be the top performing asset. It will probably start to perform more alongside stocks, alongside other assets or commodities. That's an important thing to keep in mind here, to that point we talked about earlier. If we take a look here at other coins as well, we had a great expansion off the lows, but 43%. But again, on the pullback, we're not able to hold in the 21-day moving average. It's good to see that we're back up above it. But again, I'd watch over the next couple of days to see what happens, because if we really can't get past the 200-day pocket, these blue lines on my chart here that essentially have held down price since back here in June, this is just going to, again, be another distribution opportunity for insiders, for VCs, to unload on any unsuspecting retail liquidity that's coming in to buy altcoins. And I'm not here to leave you guys in a position where you're not going to be able to make profits in altcoins, right? I'm not here to give direct financial advice. I'm not your financial advisor, but I will say one thing, which is that I'm only going to give you the signal that I'm optimistic on altcoins when I'm actually willing to start building positions. And right now, I don't feel that need to. I'm not here to pick lows or bottoms like we saw back here in August or July or September, because you never know when that bottom is going to form. No one's got the crystal ball. The key thing above all is a clear trend reversal. I don't want to be stuck holding the bag that's chopping around like this. I want to know when the trend is here and it's not only going to go back to the prior highs, but maybe even higher, and which narratives are the top performing ones so I have the best performing assets, the leading horses in the race that are going to bring me life-changing returns, or at least what I can make reasonably within altcoin markets. Again, don't expect your 10, 20, 30, 40, 50x's in the altcoin market. Focus much more on getting your solid 3, 5x returns on whatever capital you're putting in. Trust me on that, guys. It's not like the old days anymore. It is so much more difficult for the broader altcoin market to expand, let alone for individual plays, considering how much dilution there is in the market. And what we're seeing here with other coin dominance, again, it's a positive shift. We're starting to see that potential reversal here with higher lows and generally higher highs here with some exceptions. But again, we got to see it get past these long-term moving averages. Not to mention, you got the 200-week right here, which I think is also going to play its role in providing some tough resistance for altcoins, because there hasn't been much fundamental improvements. There's not anything new or fundamentally exciting, I think, in most people's eyes that's really got people coming back to this space. We can't think in our own perspectives. We got to think about, hey, where's the crowd? Where's the new capital? Are they really eager to come to the crypto space? Are they hearing about new developments? Are there exciting things like DeFi? Was back in 2019 to 2021. Are there new things that are just going to really get people sucked into the space? And I don't see that yet. A great example of that is, if you guys remember on Monday's video, and I was, again, just trying to be as neutral as I can be and not try to be biased and stuff. While we've had our skepticism about crypto markets, I really liked seeing, for example, that Ethereum had been kind of ranging on its 21-day after breaking it back here in July of 2024 and declining quite a substantial amount, mind you. But during that period of time, all it had to do is just hold. It just had to hold and cup up a little bit in price, and ETH could have started really rallying. But it didn't. It just broke through again. And ever since it's come down to these lows, there's not much buyers here, which tells me there's a lot of passive selling going on in the market, a lot of people who are still overexposed and aren't able to be exposed to such risk anymore. Which means that Ethereum, which is already down 56% against Bitcoin, is still likely going to go down a little bit more. I don't know how much more, but at least it's not in a position where I'm not trying to chase the bottom here, as I talked about earlier. I'm here to focus, and I think you guys should be as well, should be focused on when you see that momentum shift, when we start getting above the 21-day moving average. If we go back and look in any of the prior, bull markets, for example, even if you think we might be entering one, take a look at when ETH really started to move. And just take a look at this chart here. I'll put it here on the weekly here, which might make it a little bit clear. Look at our moving average lines and tell me which one is the one that really gets you excited. Just take a moment here. It's a good little trivia or quiz. Gets you thinking. Too many YouTubers just tell you what to think. I want you guys to start kind of seeing where I'm coming from and think about it on your own and critique it. What I'm pointing to here, what I think really stands out, is the 200-day moving average. Right? Because sure, there's this initial move, that's all great. It'd be awesome if you pick the absolute bottom. I think it's basically here, ETH doubled against Bitcoin, that's awesome. But when did it really start making the serious percentage moves? It started doing that in 2017 in March when it broke through the 200-day moving average, when the sky was clear, all-time highs were likely inevitable, and that we were going to go into set new all-time highs. And what happened here as well back in 2020, while a little bit slower, we got above the 200-day, held support out, and so long as we generally did that, we generally started to see an acceleration here, right? So waiting for a significant break and hold on that 200-day is going to be imperative, in my opinion, for a long-term uptrend, for anything noticeably exciting for Ethereum, like life-changing returns. There can be some short-term rebound trades. You can do that, like try to buy an oversold bounce or something, but at least wait until it gets above the 21-day, in my opinion. If something can't get above the average price of the last 21 days, it's not very exciting, right? That's basically what the moving average is telling you, is that it's struggling to, accelerate at the same price it's been averaging for the last 21 days. Solana, another great example here. This could just be a multi-month distribution pattern that will never see new all-time highs. And in fact, we haven't seen new all-time highs since back in December 2021. This is still a lower bound range. Resistance that we saw back in February 2022 and April 2022 tells me that there are less people who believe in it than those who do, right? And what I mean by that is on a capital basis right now. The market is showcasing through market order flow that this is a range where people are willing to sell, and there's a lot of sell side pressure if it's been holding prices back since December. That, or there's a mixture of that and there's not a lot of buyers. So until we really get a serious trend, we start clearing through some of these highs, I'm not really interested in Solana. I don't really care about taking the risk here and trying to make a 20% return. In the short term, I'd much rather pay a 20% premium and ride the much bigger wave when I have confirmation of price strength, when I have confirmation of momentum. And I know there's some also other plays here that people are excited about. There's SUI, for example, which looks now like it might be finally clearing through its descending line of resistance since it's listing back on some major exchanges like Binance. This is, again, a kind of price action that gets me a little bit excited here. If anything, showcases to me that this might be one of the market leaders for this cycle. There's also Say as well, all these kind of coins. But just bear in mind, guys, that they are a dime a dozen, VC-backed, heavily diluted projects that overall already listed at crazy valuations per their fundamentals. Not saying they can't go higher. Fundamentals are not really what drive markets. At the end of the day, you've got to keep a sharp eye on price. Do not just go off of the narrative that this is the next Solana and blindly hold your bags, not thinking otherwise. Keep a sharp eye. If you're going to build positions in these, it's got to hold in that 21-day. It's got to be able, if it fails on that, to be able to find corrective buyers at the 100-day and the following weeks. So that's the key thing here. Not to mention it's just already expanded a great amount since back in August. Along with it as well for meme coins, people have asked me about meme coins and what my thoughts are on that. And, aren't meme coins going to be like this crazy narrative where you can make a ton of money? And I certainly think that if altcoins are rebounding here, you could easily find some plays that will 2, 3, 4, 5x from this point, even some of the large cap plays. But bear in mind here, guys, that finding like the 10, 20, 30, 40, 50x plays are going to be in the small caps, and that's really going to require that Bitcoin is accelerating higher. A great example of this, take a look at Dogecoin. Dogecoin was bleeding against Bitcoin up until late February and only really outpaced Bitcoin for a month. Otherwise, it's back down into the red and basically faded all those gains. So we don't want to get caught holding the bag on the way down. We want to be the ones buying cheap when there's those initial signs of momentum and being able to sell and lock in some great returns. Be awesome still. Like Dogecoin went from 160 sats up here to 320. That's a double, right? And even if you didn't buy there exactly, getting a 75, 80% return against Bitcoin would be great, right? That's still life-changing. Doesn't really matter what capital allocation you have. Doesn't matter if you have $1,000 or $1 million. Going from $1,000 to $2,000 or $1 million to $2 million is still going to be comparatively life-changing for you. It's going to be good, and it's good to make sure that you're smart about it so you can compound that wealth over time. Big thing above all, though, I want you guys to be aware about, and this also kind of goes into, I think a big reason why crypto is stagnating here is because of the continued losses that are going on in crypto markets. 2024 is not even over yet, and we have already surpassed 2023's annual total report of $2.11 billion in crypto being lost this year from centralized exchange hacks, smart contract exploits, but also a huge culprit, which is the continuous scheme of diluting, creating new tokens, rug pulling, creating baseless empty shell projects that have no real fundamentals, and unloading them onto unsuspecting retail buyers. You got to be careful, guys. This is a big reason why a lot of people aren't coming back to crypto. Once they get burned, it's very difficult to convince them to come back. All those new users that we hope will come into crypto, I would think twice, because we haven't really fixed a lot of the key issues. We haven't built a safe environment for people to participate in crypto. It's one thing to worry about whether or not you're buying at a great price if you're speculating on crypto. It's another to lose everything in the flip of a switch, on the signing of a transaction in your MetaMask wallet. This should not be happening, guys. 7 years ago, if you would have told me this would be happening, I probably wouldn't have touched crypto with a 10-foot pole, right? So my main point here is that this really needs to be fixed in order to have our broader expansion. We need to have a safer crypto environment. We need to have better built protocols. We need to have more auditing, and we need to have better practices in this space. But to be honest, at the end of the day, while we may say we want these things, they keep happening. And because of that, you have to realize for what it is. There are things that are outside of our control. So all you can do is protect yourself and realize that this is probably going to be a continued hindrance on the crypto space. What you need is better security. What you need are the fundamental feature sets that are not found in other technological protocols in the crypto space that are going to allow for those new inflows of capital, new users and participants to come into crypto. Enterprise, both in traditional finance, but also in enterprise in the corporate world for a variety of different industries and use cases. And it's a big reason why I highly recommend you guys keep Zero on your radar. This is our partner here on the channel, and they've got some pretty exciting news that they just dropped here over the past week. They did a major partnership with a project called Archive, which is a collaboration between Bank Pekao, which is one of the largest Central Eastern European banks in the entire Eurozone. Beyond that as well, we're partnering with Degen House and essentially building this really interesting storage solution for archived art for large collections and artists to essentially keep it as a heritage. It's very cool to have a large bank as well as Zero partnering this. I highly recommend you guys watch the video. They did a really cool summary of how it's working, but essentially as the art market has become bigger and bigger, obviously art plays a huge role in culture. This is a really interesting project from the Zero team, and it showcases again that you're seeing a lot of big institutional names partnering with Zero. You've got T-Mobile, you've got Vodafone as well, you've got Pairpoint, STC, Techstarters, also well-known crypto protocols like Arbitrum partnering up with Zero. There's a lot of exciting stuff going on with this protocol that's been happening behind the scenes, and now the team is finally getting out there and letting the world know about what they're building. Not to mention, they just finally established a 520 million supply cap on the token, and exponentially decreasing inflation, as the governance process has finally come to a decision on the token economics. This, to me, is one of the few times I would say that you guys really should be doing your due diligence on Zero. We always talk about Zero in this channel, but this is a time where I definitely recommend you guys get familiar with the ecosystem, see what's going on, learn more about some of the different updates they have, like their EVM compatible L2, that along with that as well is going to be maintaining privacy. There's a lot of really interesting things that makes Zero stand out here, but the biggest one is maintaining privacy at every degree here, both in its traditional architecture and its L1 and its L2. too. So check out the link down below if you guys want to learn more about it. But again, at the end of the day, do you guys your own research here. Take a look into what they're building. Check out the ecosystem as well. There's a lot of really cool projects being built within the Altcoin ecosystem. So at the end of the day, guys, I want to come here to closing and talk about the state of crypto markets. At the end of the day here, until we get significant inflows coming in the market, until we stop the chop, so to speak, where we have not only continued outflows of GBTC, which are to be expected, they're minimizing over time, but along with that as well, seeing months where there are pretty significant stalemates or outflows out of the large new ETP products that leave us with essentially bi-weekly or monthly outflows in the ETP products. This tells me that momentum is slowing down in a big way for these ETP products. And perhaps it's not going to be the infinite money glitch that a lot of people are expecting that would lead Bitcoin to much higher levels. Perhaps it continues creeping up over time. I don't doubt that that'll probably be the case. But to say get to 1 million Bitcoin in these ETP products might take well over a year from where we are now. We're going to have to see. If we get that momentum, if we start seeing the 30, 50K BTC increases month over month, that is going to give you the environment where Bitcoin can go to 90K. It is going to give you the environment where altcoins can get back to the previous highs from back in Q1 of 2024 and actually revisit the 2021 highs that we haven't yet to visit, and maybe even go a little bit higher, because that is going to provide the base foundation for Bitcoin to accelerate, and it's going to have a trickle-down effect on a variety of different altcoins to allow them, especially in the strong narratives, to provide those 3, 5, and maybe some solid 10x opportunities. We'll see. But at the end of the day, guys, we wait on momentum. That's the key point here. If you guys enjoyed this video and my rambling, if you got some value out of it, consider dropping a like. It's a great way to support the channel. And again, as always, you can check out the Dash report for further deep dive into our thoughts on a potential altcoin cycle, where crypto markets are, and really when to know how to strike on those opportunities. Thanks so much, guys, for tuning in as always, and I'll see you all right back here on Monday next week. Take care, everyone.